Pat, what's up, man?
How you doing, sir? How you doing?
Good, good, good. Is this a meet? Is this the breakout room right here?
No, we're just in the meetup room waiting for people to come. I forgot to. It was a note on myself. I forgot to publish this very heavily, so I do apologize. It's probably going to be lightly attended here. So,
Oh,
so how you been doing, man? Good.
good, 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 man. Just good. Just trying to network and stuff like that.
There you go. There you go. I hear you. I'm doing the same thing. We're trying to raise some money for a deal here. We're trying to get things to the finish line.
Oh yeah, yeah, yeah. I understand, man. I understand. I understand. Um, yeah, I was gonna go to Jonas is meetup. I was like, oh, I know, the same time as yours.
Okay. Yeah, I did that. Every
Yeah.
week I've got something every night. It's like I can only just put in so many things. It's like, my goodness. Yeah, because there's another one tomorrow night, a couple of them tomorrow night that I would like to attend and stuff and see how that's going. So, yeah, it's the days turn in. You spend most of my day on something like this, and then the night's the same way until 8 or 9 o'clock at night. So, now, where are
Right,
you
right,
investing
right.
again?
Well, I'm in Tacoma, Washington, but I want to invest in Charleston and Tampa area.
Okay. Okay. Awesome. All right. I remember you saying Tampa. That's a growing area. That's a really good area.
Yeah, I have a couple properties if you're interested.
There you go. I was gonna say Amy has something.
Oh, in Tampa?
Yeah, I'm in South Florida.
Oh, okay, okay, okay. Yeah, I'll be moving there next year.
Oh, cool.
Yeah, I'll be moving there next year.
Yeah, what you got 10 units you said, right? Is that what you got, Amy?
No, I currently have, well, I have several different buildings, and total it's like 1,000 different doors.
Okay. Awesome. Robert, welcome. I didn't see you come in there. How you doing today, sir?
Oh, I've had better days, but it's getting better now that now that it's coming to an end, I guess. How are you guys doing?
Well, hopefully it wasn't too bad.
Well, I'm up here in Detroit. We've got snow and ice coming down. The post office has got severe problems, which is affecting my business, or
Uh-oh.
one of my businesses. So,
Goodness gracious.
but
Yeah, I'm in Detroit too. I looked out this afternoon. It was snowing. I'm like, oh my goodness. Why do I live here again? I'm just crazy. Is it still snowing right now? I haven't looked. I've been on the phone.
it was a half hour ago, just real lightly, but
Okay.
the roads I just around 6 and the roads are really bad.
Oh, wow.
I'm over here on the east side.
Okay. I'm in the Norfolk area, Norfolk Plymouth area. So I've been stuck in the house.
Oh, okay. Yeah, I used to work out there. That's
Okay, cool. Now, do you currently own properties right now, or are you an investor? Or?
yeah, I do. I own the property that
I think you cut out. I don't know if it's
you
my
lose the connection here.
yeah. I don't know if it's my internet or maybe it's just the cold weather up here in Michigan.
Oh, okay. No, I own a couple of office buildings.
Oh, okay, awesome. Okay, how are they going for you during this COVID?
Okay, they're more how to put this, not so much a cash flow play, but a capital appreciation. And in that respect, they're doing quite well. So
Okay,
knock on wood.
that's awesome. Okay, cool, cool, awesome. I do apologize. We normally have more people here. I forgot to publicize this. I've been busy getting a deal, LOI and stuff in this week, so I've kind of neglected on my duties as a marketing guy to get this publicized. So we normally have 10 to 12 people at least here. So anybody looking at a deal, haven't got a deal they want to talk about or anything like that?
Well, Aaron, you want
Oh,
to
no,
go
go
first?
ahead, Robert. Go ahead. Go ahead.
Okay. Well, I I missed out on a deal that it was, it turned out to be a good deal, but what happened was it was for it was a commercial piece of property. It was a restaurant, and it was a couple $1,000,000, which unfortunately is out of my league. But I know a lot of other investors. So what I was trying to do was to put together a syndicate to buy it. And everybody said, oh yeah, all the numbers look good, which they did. But the problem wanted to get a loan for about 60 to 65% of the price of the property. But one of the investors had to be like the lead partner, and they would have unlimited liability, or the liability would come back against them personally.
A recourse loan?
Exactly. Yes. Thank you.
That's okay.
My brain's moving a little slow tonight. So yeah, there had to be a recourse loan. And by the time we got everything worked out, somebody else snapped up the deal.
Oh, okay.
So,
gotcha. Yeah, things are hot nowadays. It's
got like, yeah.
Hartford, how you doing, sir?
So
now is that what typically you invest in, Robert? Is that type of property, office and restaurants?
well, I've only invested in warehouse and office.
Okay.
I think I might like restaurants here, but also I always kept away from residential, because of legal problems and so on. And also I didn't think the returns were really all that adequate. But through my net,
Yeah, you're cutting
opening
out, Robert.
crazy deals in and around Detroit that have kind of got me rethinking that.
Gotcha. Yeah, warehouse has got to be a pretty hot property right now.
Yeah. Well, every property's so, or just about everyone, but
Yeah. Multifamily is definitely hot. I can tell you that's where I'm at, and man,
I'll do.
That's cool. That's cool. Hartford, how you doing, Hartford?
So.
You doing okay over there, man? You get that? You need to get a computer, dude. You need to get a computer. How you doing, sir?
Tablet. Yeah, but I'm doing good.
That's cool. Hey, that's what you need to ask your family for Christmas, is a PC go on the Zoom instead of the tablet.
Well, see, I have a laptop. It's just by the time I...
Well, this internet is horrible tonight. Goodness gracious.
have it with me, so.
How's your building going? Or your purchase?
Moving slow. I have all the money for the down payment. Now I'm just waiting on the seller. I sent her over a contract, and she wanted an attorney to look at it, which I said was fine. And it's just been a couple weeks, and this week because I'm getting some insurance quotes, and they had some questions that I couldn't answer. She got back to me and said, oh, give me a little while to get all that together. So I'm just, she's kind of moving slow. Shake the tree too much because she's, giving us a pretty sweet deal. So
that's cool.
That happened too, where I had to go to their broker.
Oh, okay.
Yeah.
Now this is the mixed use one, right? The residential on top and the retail on the bottom. Is that right, Hartford?
yes. Yeah.
Okay.
Yeah.
You're dealing directly with the seller, right? So the
Hopefully,
broker,
next couple weeks.
man, this internet is bad.
Yeah. So there's no broker. I'm dealing directly with this.
Okay.
What'd you say, Pat?
I said this internet is bad tonight, man. I'm getting parts and bits, and I don't know if it's mine or is it the actual connection throughout the whole country here.
Yeah.
Interesting. Well, we've got an LOI in on a property, and it's 246 units in Georgia, and we're trying to pull together a team, investing team to it's a big lift. We got to raise about 6 million, 6.2. So we just got the sponsor on board today. Just got our quotes back from Freddie Mac, and the rates are insane. I mean, they're just it's what they call adjustable or floater, and it's 3.04% for 10 years. And I'm just like, that is insanely low. And that's no IO. I mean, we can have IO. We have to pay for it, but I thought that was pretty astounding that the capital the capital stack is that low as far as interest rate. So we're now in the process of raising money for that deal because it's two separate properties, but purchasing it in a portfolio. So I was just shocked at the interest rates we got back from Freddie. We're waiting for our Fannie term sheet to come back, and she said it's probably a little bit higher at like 3.45 or something. I'm like, oh my God, that's still just incredible. When you look just at what a couple 6 months ago it was 4s and 5s. It's just crazy. But now it's trying to get to the finish line with the there's a couple groups competing for this property, so we gotta see what we can do to entice the seller to go with us. So we're looking at raising some capital for that. So workforce housing, like I said, 246 units, all brick buildings, which is nice. Great areas, which is obviously when you get into those good areas, you get a lot of competition, and that's what's happening right now. Getting a couple other groups looking at it, but we'll see what happens. We'll keep you posted. Aaron, do you have anything that you're working on, or you're still trying to get targeted in Tampa, right?
Well, I'm more in the. I was a wholesaler, so I'm just trying to learn as much as possible. And then I'm going to join John Casman's group next month and get coached from him.
Awesome. You find that those groups are helpful to get in and get into networking and stuff like that with those groups?
Work a lot. I've done people like yourself and just put myself out there in this meeting. Like I said, I'm just trying to I want a capital raise, I learn this month, and then get coached up next month and get to it.
Awesome. Okay. Awesome. Yeah, you're stalled again. I don't know if it's my Zoom doing this. I do apologize for that. What you guys can do is put your contact information in the chat here, and then that way you guys can network for that. Normally I do try to do breakout rooms. We're not going to have enough people tonight for some reason. Don't know why. I don't know if they're trying to get on and they can't because I've never had this much problem with the internet. And I hope it's not my side. I do apologize. Now, Amy, are you looking outside of Florida, South Florida? Or are you looking in other areas?
I all over the country. We have properties in every state.
Okay, I heard you have properties in every state. I missed the other part.
Yeah, no, I'm always looking for so it doesn't really matter what state.
Okay, you're just looking for a one that makes sense.
Right.
Okay, cool, awesome. Trying to find my stuff here for my Zoom chat here, so I can post. And what you guys can do, I don't know if you know this or not, when you're in the chat window, those three little dots over to the far right next to file, you can click on that and then you can download the chat. So you don't have to copy and paste individually. It says more, you can click on it and then it'll say save chat, and you can save the chat in its entirety to save you guys some time trying to capture and all that kind of thing. I learned that trick a while ago when I was on a meetup with like 70 people. I was spending more time writing down who was on the call and trying to, who was messaging me and this and that. So somebody taught me how to do that. So
Cool.
yeah, it saves a lot of time. You can download a Word file and then I put it from there into Excel, so I can get it into my database. So it looks like you do business loans, huh, Amy?
Yep.
Now, is that asset-based business loans or is it based on inventory?
No, they're two different things. So I have a different lender for commercial loans than I would for inventory loans.
Awesome. Is that business going pretty well right now?
Yeah, I've been working a lot with Amazon because there's a lot of sellers on Amazon that have warehouses and they need loans on their inventory until they get it sold.
Oh, okay. Oh, that makes sense. Okay. That's awesome. Okay. So like, is that what they call business credit?
Similar, yes.
Similar.
It has a lower interest rate though.
Okay. Awesome. Oh, okay. Awesome. Hey, Eric, how you doing, sir?
I'm pretty good. And you?
Fantastic. Can you give us a 30-second commercial on what you do and where you're from?
I'm from Detroit, Michigan.
All right.
I'm a real estate investor. I have about 6 rental properties. And basically that's it.
That's good. That's still good. Don't worry about that. That looks good. I'm big in Detroit too. So is Hartford. So welcome. So now
thank you. And I'm trying to learn as much as I can to get more.
There you go. Now, are you looking at getting into multifamily or expanding your portfolio of the single family?
I have one multifamily, but I have to do the updates. I haven't updated it so far, but I'm looking to get into anything.
Okay. Awesome.
Eric, what side of town are you on?
West side.
Okay.
Well, that's right. Robert's from the Detroit area as well.
Yeah, I'm over on the east side though.
Okay. Yep. West side Detroit.
Okay. Awesome. Now, how are your rentals been performing during this COVID? Pretty good?
I haven't had any problems. I had one tenant who she was laid off laid off for about 2 months, but soon as she got her stimulus, she gave it to me. So I haven't had any problems. Everything's been going fine and steady for me.
That's good. Well, I guess it really doesn't matter because we're under the CDC, no eviction anyway. So it's
Yeah,
do anything.
and that's another thing why I didn't worry. Like I say, when she first told me when it first started, I was like, basically in my mind, there's nothing I could do anyway because I mean the course is closed and everything, so it's nothing I really could do but wait.
Yeah, that's true. That's true.
But I've been in this about 9 years, so I had a lot of bumps and bruises and learning. So I did run across a few tenants, like I say, along my way of not paying, evicting. So like I say, I'm not gonna say I'm well adept, but I got about 8-9 years experience in this.
That's cool. That's cool. Now with this particular tenant, did she contact you when she was going to be late, or did you have to contact her? I'm assuming it's to her because you used that.
Yeah. She called me. Well, I think I was calling her for something else, but then she kind of called me. When she called me back, she laid everything out. And my thing was like, you were honest with me. So, and then like I said, in the back of my mind, it was also like you say, what really can I do? I can't. The course is closed, so I got to wait it out anyway. But like I say, as soon as she got her stimulus, she paid me. So, I mean, with a little extra once she started back working. So I really haven't had any complaints so far, knock on wood.
Well, that's good. That's good that she was kind of proactive about it, because obviously having a home vacant in Michigan in the winter is not ideal, to say the least.
Yeah. I didn't experience that too. Having to go check on them and look, and then making sure the pipes don't bust. So, I mean, and, making sure nobody breaks in them. So, like I say, I've been experiencing that too.
Yeah. Yeah. And that's probably the best part is just, if they're proactive and reach out, or even if they're not, it's better just to keep them in the house.
Oh, yeah.
They don't get broken into, just, then you work it out. But I guess my question is, like, some of these people who just, as soon as that CDC started, they stopped paying because they had the green flag, and they're still not paying. It's like, where do they think that it's, you're getting $7,000, $8,000, $10,000 in the rent? How are you ever gonna recover from that, right? I mean,
well, let me see. I want to like get a right answer to this, but I know, like I say, I thought about like I say, I had a few people I had to evict, and I don't know if, like you say, a few of you in Detroit. Detroit has something where you have to register your properties, and like you say, when it comes up, like I say, I haven't ran into somebody where if that happened, I also have a plan. Like I say, one of my plans were like, if I happen to run into somebody who wouldn't pay and it's a time limit, in my mind, like, because sometimes, like you say, there are people trying to beat the system. But you can also, like I told somebody, you don't have to keep renting. You can sell the house. And that way, you can try to, like I say, I don't want to seem like I'm trying to manipulate anything, but, you can get yourself out of it by also selling the house. You know what I mean? So I thought about that way too. But one of the things I kind of tell my tenants up front is one thing. I prefer honesty, because I'm going to be honest with you. If there's something that I can't do immediately, I'm going to let you know. And like I say, I tell them I would prefer, if you're going to be late or can't make one payment, I would prefer you telling me instead of me having to chase you around. I like to, let's just be honest with it. Like I say, even if you tell me honest, there's only a few things I can do anyway. I can try to take you down to evict you or wait it out. There's really nothing else I can do.
Yeah, well, that's a good attitude to have too, because like you said, especially where you don't want it vacant, and then obviously you open up to vandalism or people taking, that's the thing. You just kind of work with them, and that's what I found out too when I had residentials. If I worked with the tenants, most people are good people, right? They're going to try to do stuff. They're going to help out. They're going to say, listen, can I do this? And it kind of is a gray area, because obviously if you try to go to evict, if you've taken partial payments, the judge is going to say, well, you kind of, but you got to gauge the kind of personality. I think, in the years I did it, I think we took partial payments, 2 or 3 times. But we were always up front with them, and they just said, okay, at some point, we're not going to catch up. We're going to leave. Okay, great. Clean the house up. Let me go. if you treat them like that, instead of being hostile when they do leave, you got to replace stuff in the house, right?
There you go.
Stuff is missing, why would they take the sink? What in God, because you made them mad,
Yeah.
I just found it you're going to lose money anyway, just trying to lose less money by, hey, listen, we're not working out. This is not happening. You're going to be not going to be able to catch up. Why don't you just go somewhere we'll let you, just give me the keys or whatever and just do it that way. And that I found doing it that way. And sometimes you can't, but I think I've only taken maybe one or two tenants in the 100 that I had at that time, to court, because one, it's costly, and two, it just creates that animosity that, you just
You're correct.
Didn't want to do it. So
A lot of this to me is learning on the fly. A lot of, like I say, I've read some books, but I really haven't had anybody who showed me step by step. This is all basically me learning on the fly. And like I said, I had some people that I had in the beginning take to court and get them evicted. But like I said, that was a headache, time consuming, costly. So, like I said, I came up, if I be honest up front, people are generally honest and they going to tell you. And like I say, I always tell them, I just rather you just be honest, because I don't want to have to chase you. If you don't got it, really, what can I do? What can I do?
Yeah, that's true. And that's been my policy too, just kind of be upfront. And you can tell when you're talking to them if they're telling you a story or, this or that, or, and just say, hey, listen, you lose your job, you do this, we got, we had, we kept the houses up. They weren't, really horrible houses. So it's, so we try to do it that way too as well. So that's a good way to do it. That's a good policy. They'll respect you for that. When they come to the realization, hey, listen, I can't stay here, right? I just can't afford it, or, hey, listen, I'm getting too far behind. And that's good. That's awesome. Well, that's good. That's good to hear, man. And there is no books on that. I've looked around trying to see if there's any landlording books, how to talk to people. It's not.
Hold on.
You're doing
you got to learn this on the fly. That's just how it is.
Yeah, there's no book. I mean, there's a couple books and stuff like that on difficult people, but not everybody's difficult, right? So now you got to, how do you talk to people that, or just, yeah, that's true. But that's how you do it. Just lessons learned, and okay, don't say that, say this, and you mark it in your memory bank. So interesting. Awesome. Well, thank you for sharing. I appreciate that.
Okay.
Awesome. Anybody else got anything else? I don't want to keep everybody here to 8 o'clock if there's nothing else to discuss. I have the line open until 8, but seeing that we're having a little internet connection problems here, I don't want to keep people if
Okay, well, I've got a couple questions or
Alrighty.
observations. Has anybody, or well, how to put that, back in March, April, May, when there were huge market disruptions, did anybody notice any crazy deals on properties or anything like that?
No, I haven't.
No.
Nope. In the multifamily, there was no slump. In fact, I think it's picked up the pace as far as, at least in the areas that we're looking at investing, is it's still strong.
Yeah, I talked to a few owners, like 16 units, that type of size, and yeah, they were still, there weren't any fire sales from the owners that I talked to. They were still holding tight. So
Interesting, because the reason I ask that is that a lot of REITs really got crushed, and some of the yields on the REITs were just insane. Maybe even up to 30% or so. So does anybody go between investing in REITs and real property that you hold, or does anybody ever do that?
Are you asking, do we invest money in REITs that give you a return? And you're saying that
Yeah, because, here's where I'm going, that, and this is not the case right now as we speak, but back, when there was the market meltdown, you could get just crazy returns on buying into, these real estate investment trusts So why would you be fiddling around with, single family housing or, quadplexes or stuff like that, you're getting a professionally managed, truly, passive income that, it would be very, very difficult, I think, to actually do it yourself. That, that these securities, the stock market was just melting down. So just wondering if anybody ever does anything with that.
Well, typically what we do is syndications, so we're kind of the same type as a REIT. The benefit there is obviously we control the investment. So no, I don't do the REIT style investing because typically you don't really get to pick what investment. They just say, okay, we're in office, or we're in car washes, self-storage, and you typically don't really get to pick the areas they're in, right? So there's almost like a stock. You really don't, if you invest in Ford or GM or Chrysler, that's all you get. So we're kind of on the other side of that, but that's interesting. But we haven't seen, obviously we look for distress. We just haven't found many people or owners currently that are in distress. I mean, we're definitely looking for. We were expecting it. In the articles I'm seeing and the owners I've talked to, they're really, there is no distress right now that I can see. Now, a couple months from now, it may be a different story, but like the two properties we're looking at now, the rent rolls, there's I would say out of the 120 units of one building, there's only 8 vacants, and there's only like 2 other people that are behind a month. So that's not that bad in what you would expect, a fire sale. So maybe in a couple months. I don't know. But that's a good question, though. That's a good question.
Yeah,
Go ahead.
Okay.
I was going to say, I think, I don't know. Do you own any rental properties?
Do I? Yes.
Well, I mean, to me, the difference is, but I mean, in this, different people like different things. You know what I mean? You can be successful in different things. That the way I see it in the real estate field. But the reason I like owning some real estate property over the REITs is because I can take one of my properties and, like I said, I can pull money out of it. Now, I don't know how much you can pull out of a REIT. I don't know, but I can pull money out to go buy another property.
Well, you can.
I mean?
No, I hear what you're saying, Eric, for sure. But, let's say you have 1,000 shares of a REIT or 10,000 or whatever. If you need to get money, you can either sell part of your position or you could margin part of it,
I got what you're saying, but I can pull money out and still keep the asset. Like say if I could pull 50,000 out, still collect the same rent, take that 50,000 and buy 2 other houses.
Well, you can do that with a REIT under a margin loan.
Can you lose with a REIT?
I'm sorry?
Can you lose with one?
Oh, of course. Oh, absolutely.
I mean, we're to me, now can't speak on anybody. Now, I can say I think you can lose with real estate, but if you, like say if I bought a house for 10, I really can't lose. Only thing I can do is still break even. Because like I said, if I pay for a house for 10 and I got somebody renting, let's just call the numbers 500. I'm getting 500 constantly. Even if they leave out the house, I'm still never losing because I still got the house and what it's worth.
It also comes into sorry, but with your sweat equity. If you're a REIT, you just put the money in. You got the people who work at the REIT doing all the work. You buy a house for $10,000, unless you got a big team with you, you're going over there doing all the work and putting all the sweat equity in there. So I guess it depends on, whoever, what you want to do. You know what I mean?
Yeah. I mean, if you want to be active or passive, right?
Yeah.
Same type of thing like in a syndication. We have active investors, which would be on the GP side that come in and asset manage, like me, underwrite, asset manage, or limited partners who just give us the money and they get a return. So it just depends on it. Two totally separate, different things. It just depends on what you want to do.
Oh, for sure, no doubt. But I guess maybe I'm not communicating right here, and you'll have to forgive me. It's been a very long day, but
You're doing good.
At the end of the day, everybody's got a certain amount of capital, and I mean, you got to be careful with everything, of course, and you have to be comfortable with what you invest in. But for me, I want to get the highest possible return on my money with the lowest amount of risk and the lowest amount of work. And at various points in time and various opportunities and various deals, that will shift. It could be this house, or it could be that warehouse, or it could be this building, or it could be that REIT. So, the reason I'm asking is I bought into a REIT for we'll say $1.30 a share in April. Today it's $4.10. And it pays 48 cents per share a year in dividends. So, that's pretty good return. I just wish that I had a broader base of knowledge of all these different things, because at certain times, real estate in Detroit can be crazy cheap. REITs can be crazy cheap. Markets move in cycles, and you gotta just look for the opportunities, I guess.
Yeah, and that's really kind of what it is. Again, going back to the passive or active, investing in a REIT or stock market is really, you're really passive. Now, you look at Warren Buffett, he buys companies, which is obviously a different way of doing it as well. So it just depends on how you want to do it. We're more on the owning the asset part and controlling that, investment. So it's, do I go down in apartments and work on them? No, we hire staff to go do that. That's what the property manager does. So yes, there's risk, but there's a lot of more upside than buying a REIT because of the fees and the rent increases, and we can chart our success or failure by doing it. With doing it in a REIT, you're really relying on the people that run the REIT to get the returns that you want.
Right, but Pat, what I'm saying though is that in March, April, May, when there's this huge market meltdown, unless I'm really mistaken, you're not going to be able to get the returns, because I've more than tripled my money in less than a year. And if I decide to hold it, I think it's 28, 29% cash flow.
I mean, I can understand what you're saying, but I mean, I guess because I'm not experienced in the REITs. Now, I bought one of my houses for $5,000. I'm charging $600 a month. Now, I don't know what that rate return is, but
that's
less than a year to get my money back. And I had the house for 5 years.
Pretty good.
That's a definitive return.
No, that's an incredible return, but and that's great, but I'm going to suggest maybe you have special knowledge in that area, or you have a lot of sweat.
I mean, some of it getting the houses was like I say, I got that house maybe 5-6 years, and of course, some of these houses in Detroit, they was going for pennies on the dollar. You know what I mean? And I got in on some of these houses before everybody started, coming here from out of state, from different countries, knowing about these houses. Because now you're not going to be able to get a house in Detroit for $5,000 no more. I bought one last year and I spent $13,000.
Eric, the thing is, $5,000, you had to put something in it to bring it up to livability, right? So I guess what Robert's kind of saying is, yes, it's $5,000 initially, but you've got to put it so all in. Let's call it let's call it 10, right? Just for round numbers and math, and it's too late in the night to figure. So $10,000,
There you go. Yeah.
you look at, okay, you're getting $600 a month, you know, of that, there's some kind of return. Again, each one has their pluses and minuses. Obviously, if you have the crews, they'll go have stuff like that. Yes, you have to pay that, but it really kind of depends, Robert, what you want to be passive or active. That's kind of really the difference. Now, each one has ups and downs. Obviously, you get dividends or something like that. Each one, and again, I'm the same way. I don't really know much about those. I stopped investing in the stock market probably 10 years ago because I got into the actual ownership of property, which, again, that's just what I like and like to do. You know, there's people that invest in, you know, stocks and bonds and stuff like that are making a lot of money. But it just depends on you know, when he says 5,000, yeah, you get it 5,000, but, you know, you got to make it livable. I'm not saying they're not livable now, but you got to put some equity in them, you know, put lipstick on them and then rent them out, you know, because you got.
Yeah, I got you.
Yeah. And it just depends on what you're willing to do. You know, obviously, Eric, you love doing it. You like doing it. Awesome. You know, I invested in billboards, you know, and I enjoyed doing that, you know, because that was really more passive than anything, you know, but I also had a retail strip center that I had to deal with tenants and, you know, brokers. And it's just really what you know, the returns are really, you know, I don't know how to compare them because I've never done a REIT, Robert. So, I mean, but that's how you do it, is depending on, you know, what you want to do with that.
Okay.
But that was a good question. And that was a really good question because that, you know.
Right.
Cool. Now, but you say you own property.
Yeah, but you know, the sharing of knowledge. I'm sorry, repeat that.
I'm sorry. Yeah, we got delayed there. I said, but you own properties as well, so you do both kind of sides.
Yes.
Okay. Interesting. So you're looking which I.
Yeah, but you know.
Go ahead, Robert.
So what I was going to, okay, yeah. So what I was going to say is that some of this one particular REIT, you know, and I bought it and I did well. And, you know, I have a circle of friends and associates that I share information with. So I told one of my, you know, friends about this, and he's like, wow, that's really great. I'm going to look into it. And he looked into it and he's like, wow, I'm going to put some money into that. But do you know that they have bonds that you can buy that are trading at a substantial discount?
Gotcha. Okay. Yeah. I mean that.
And we made a lot of money. We made a lot of money off that. So, you know, the back and forth, the trading of information, you know, which is why I'm trying to do more networking, can be very lucrative and helpful.
Yeah, and it can. I know that on another note, different kind of investment, I have some gas and mineral rights out west, which I never knew about until I got them. They were my father's. I inherited them. You know, so yeah, there's 100 different ways to do this kind of stuff. You know, just having the mineral rights, or are you the actual people that go in and you give money to the gas companies that go in and do these mines, you know, in these pipelines. Yeah, that's a great way to share too. It's just different ways of doing it. I've checked into that as well. You know, investing in the actual mining companies that go in and drill the pipelines and get a return on those. But that's interesting. Now, how long, Robert, have you been investing in REITs? A long time? Kind of get cut off there.
Yeah, long to maybe, I don't know, 15 years, maybe 15. It was really this March and April, you know, with the big market dislocation, that there were really good bargains. Now they're not quite so, well, they're definitely not nowhere near as good of bargains as what there were. But one of the problems is you have to have the knowledge and you have to be watching. It's you got to be kind of set up ahead of time, which requires a little bit of work. But
which I think is the same kind of thing as like Eric was talking about. Yeah, you got to be kind of monitoring it too, because
right.
Even though it's an apartment building or houses, you're still going to have somebody or hey, is it still there? Are they still in there? I mean, again, it's the level of, passive or active that you want to play in it. Again, my thing is if you can make the same kind of money or better without having to leave your house, why not?
Oh yeah, I understand that. Yeah, I'm gonna definitely look into them. I'm gonna look into them.
Yeah, and thank you for sharing too, Robert. That's because again, that's what we look for. Is just different things, different ways. Because not one.
Because Pat, sometimes I go to not yours, but some of the other meetup groups, and they'll be like, "Hey, we're gonna buy this $175,000 house in Berkeley, and the cap rate's going to be 9%. I'm like, okay, I don't know that I would necessarily want to be putting that much capital to work to be making 9%.
Yeah, I mean that's another thing is one, the person doing the deal, when they talk the deal, does it make sense? Like you said, is that an area where that house is worth that much in that area? I don't know Berkeley. So I mean, those are all things that
Yeah, but you know what I mean is that people are taking on a lot of leverage and doing work, and they're looking to make 9% return, which it's not bad. It's better than a poke in the eye, but I got a funny feeling that, prices have gone up so much that the risk to reward in certain markets and certain assets is kind of skewed at this point. But
yeah, I do kind of agree with some of that. I mean, some of the prices that even like this deal we're doing here, when it works at what we put the LOI in, and now the seller's coming back saying, hey, can you go up or make stuff hard? And they're pushing that boundary of, price per unit and stuff. And then there's a point where it's, even though financing's at 3%, right, I still got to get a return to my investors. I still got to make money in the deal. So it's like,
right. Yeah. And a lot of people are juicing their returns by boosting their leverage, which I think is could be a huge mistake.
Yes. We've seen that as well. We've also seen there used to be a lot of preferred returns in real estate. Those are kind of notching back because when the COVID hit, they were doing a 5 or 7% preferred return. Well, you got, problem with, evictions. The money wasn't there to pay the investors, right? Because they over leveraged it, but we just haven't seen a lot of those come to market yet. I don't know how they got, and again, a lot of them, I think some of them, I don't know of any of them personally, but may have done the, not the forbearance, but the putting the money on the end of the loan, which is really just buying you time. I mean, that's really all it is.
Right.
I don't know. I mean, I agree with you, Robert. There's some of the stuff that when we put them in our spreadsheets, they don't pencil. They're here and and we can't get financing it, and we're not going to over leverage. But some people do. Some groups do. Some, because their cost of capital is lower than ours.
All right.
God love them. Go for it.
All right.
But it's got to make.
Well, let me switch gears here and throw open a question to everybody here. Is anybody ever considered doing anything with Airbnb or VRBO with any of their residential properties?
I've talked to people who do that, and I read speaking of everything that we're going through right now. I mean, I heard they took a really big hit, because nobody was traveling or anything like that. But before that, there were a few people in another meetup group that I was going to, the Oakland County REIA, and who were doing it, and they seemed to really like it, and they were saying they were getting, you know, better returns versus just regularly renting out the house because you can charge so much, you know, per day or whatever. And they had a whole system where, you know, one guy had a whole system where he doesn't even go because he has it set up to where he had the cleaning crew has a code to get into the house, and the person has a code to show the whatever they need to do and everything. So he just does everything remotely after, you know, once he has it set up in place. But he had a whole system, and he was saying he was making more money that way versus just you know, traditional rental.
Right. Yeah, no, there's certainly some opportunity there, I think, when things get back to normal. You know.
Mm-hmm.
Now,
Right
can
now,
I ask you a question? That do you believe that can work in this state? Well, at least, let me ask you that, in this city.
You'd be surprised, man, because you know, there's a lot of people that still need and want to come to the city. Of course, it depends on where it is. You know, you're not gonna have an Airbnb on Finkel. You know what I'm saying?
Mr. Matthews, are you in Detroit?
Yep. Yep.
Okay. Well, so let me chime in on that because I've done some research.
Mm-hmm.
I think absolutely Airbnb can work in Detroit, but like you say, you got to be careful. Nobody's going to do Airbnb on Fenkel. But for example, over here on the east side, near St. John's Hospital, on Meringue, or wait a minute, or is it Ross or Meringue? I always get that mixed up. Excuse me, gentlemen. But
I know what you're talking about, though. I know what you're talking about.
there are a lot of duplexes, triplexes, quadplexes that doctors, healthcare coming St. John's. You probably also have the hospital if they've got some care. And here in Detroit, I think is kind of a weird situation on the east side, at least, because you've got a whole bunch of hotels downtown.
Wow. It's
Very high end. And if you need a place to stay, downtown is great. But then, like, if you want to be, you know, a little bit further out, there's a real scarcity of hotels until you really kind of hit the suburbs, like, and, you know, further out. So there's like, you know, I don't know, maybe a 10-mile stretch where there's very little lodging, you know, hotels, motels. So I think on the east side, at least, you know, there could be opportunities, little pockets for Airbnb.
Yeah, I think there's a Airbnb meetup group for.
Well, it's like any real estate. I know we're freezing.
I want to check that out on Meetup.
It's like anything. It's location, right? I mean, sometimes rentals work over here. They don't work on this side. I mean, it's the same, you know, kind of concept. It's just who wants to get, you know, into that Airbnb. Now, does the city police those pretty? Because I know some cities are very strict on that. Is the city of Detroit strict on Airbnbs? Did I go out, or my internet's?
I'm trying to.
Goodness, I think we're having internet.
But I believe the city was in. That was helping the city with, you know, revenue. Yeah. So, but don't quote me on that. I thought, and this was like maybe 2 years ago when I read this, but I think at that point they were in support of it. They weren't against it or to punish landlords for doing it at that time, at least.
Well, could do if you're really interested in Airbnb, Robert, and you had the money for it, you can make it like a theme place. So, like, instead of you just, you know, competing with everybody else, you have a theme for it. So it might be something like certain beers from the local area. It can be, welcome to, you just be imaginative of what it is. But I mean, if you can just make it into a theme, now it's not just an Airbnb, it's an experience. And that's the whole thing about it. You want to make these things an experience for people to come to. So if you make it an experience and then maybe have something attached to it, so maybe you can work with the local, the Tiger, something like that, they tickets or something like that, so that when people come in for a ball game, probably not this year, but for future years, now it's more of a incentive to come to your place.
That's a heck of an idea.
Yeah,
I was gonna say that because I got some partners. They go when they travel like to Tennessee for football games. That's why I say, can you do that here? Because we don't have really a lot of events now. So that's why I say, because I know they travel.
Not today, but maybe
not during COVID.
Yeah, but there's so many things
in general.
Well, yeah, I mean, but you'll be surprised, man. I mean, I thought that at one point too, but talking to the people who do the Airbnb things, they were always, they said, well, they claim, I don't do it. I'm just going off what they told me. They were always getting people that are coming in for work, or they're coming in for an event, or they're a sales guy, traveling salesperson, and they don't want to stay at a hotel for whatever reason, whatever.
No,
I actually, now I think about it, I don't know if I read it or somebody told me, but there were people who would pay, a house that you said you would buy for $1,000. There were people who would pay just to live in that house as is for $1,000 because they want that experience. Go figure, right? I'm not sure there's a lot of people who would do that, but a lot of especially here we're saying a lot of foreigners, Detroit's supposed to be this and that. Let's live in the scariest part that we can find. And they were paying,
Well, I'm gonna say the house that I got for 12, that was in 2012. Like I say, I had just jumped into the auction thing, and like I said, I don't know if you guys were in the auction back then, 2012, 11, 10. They was giving these houses away for little or nothing, or nothing.
Yeah, I mean, I'm just saying, like when a house that's, for example, $500, everything probably been stripped out of it,
Yeah.
I would say now, but back then, like I say, I got a house for $5,000, and I didn't really have to do too much of anything.
Oh wow, okay,
that's great.
And then, like I say, some of the houses in the auction, people are already in them. People are already in them.
Come with tenants. That's awesome.
There you go. So that's why I say it. Now, like I say, I did it last year. It's you're not going to get no house for $5,000 no more.
No.
Them days are gone. They're gone.
Well,
Because the competition is steep. You're going to pay 18 and up.
That's still pretty good. That's still.
Oh yeah, it is. But like I say, in 2012 and 11, they were steals. Steals.
That sounds like it. Well, we're at the top of the hour here, gentlemen. I appreciate it. I want to respect your time. In fact, I do have another call here in about 15 minutes. But I do want to say thank you very much for joining. I appreciate you guys sharing. We'll be back here again in 2 weeks. This is a bi-weekly meetup. Next time I'll do my most to market this, and I do apologize. Again, I normally have quite a few more people here. That was my fault. But thank you for sharing. It was good meeting you, Robert. Good meeting you, Eric. Hartford, always good seeing you.
Yep,
Aaron, thank you very much for joining. I appreciate it, sir.
No problem.
And we'll see you hopefully, guys, in 2 weeks. We'll do the same thing. And you guys have a good holiday. If we don't see you, well, I guess 23rd, the holidays, that's next week. I'm getting confused here. We're a week away from the holiday. But you guys enjoy, and thank you very much for joining.
All right,
Hey,
have a good one.
everyone.
Have a good one, guys.
Have a good one.